Imagine waking up to a life where your money works for you. Instead of the sound of coins clinking around in your pocket, listen to the satisfying ping from your phone of dividends landing in your account. Picture a world where financial freedom isn't just your imagination, but an actual reality. This isn't an unattainable fantasy. It's entirely achievable. Retirement comfort means different things to different people. There's a wide range of financial scenarios to consider. Some might specialize in reverse mortgages, selling belongings, or moving to a more budget-friendly home. However, one option often overlooked is living off investment dividends. It's a path that can provide you with $2,000 monthly income. Stay with us because we're about to give you 3 efficient methods to reach that goal. So, what's the secret tech to determining your ideal investment amount? It all comes down to your desired lifestyle. The average person spends approximately $60,000 annually, so this number might not align with your specific needs, goals, or comfort level. Adjusting this benchmark to fit your specific lifestyle is perfectly reasonable. Let's add some spice to this equation. Imagine a life where your investments consistently generate income, allowing you to enjoy the fruits of your labor without taking away from your initial capital. It's like having a secret money tree that continues to grow and provides you with passive dividends. The possibilities are endless. Remember, this journey is about finding a balance that aligns with your goals. Take a moment to visualize your future, the life you want to lead. Then, let the numbers guide you towards the investment amount that will transform dividends into your path to financial freedom. In this video, we'll help you reach the target of $2,000 a month, the key to your financial independence. Understanding dividends. First, let's grasp the concept of dividends and how they function. Picture yourself as a part owner of a company by holding some of its stock. When that company turns a profit, it faces choices on how to utilize it. They can reinvest the profit to expand the business or distribute it to you, one of the owners, the shareholders. If a company chooses to share some of its profit with shareholders, it's called dividends. As a shareholder, you receive a portion of this profit based on the number of shares you own. Dividends can be provided as cash through digital deposits or checks, or they can be reinvested in more shares of the company's stock. These payouts vary across companies and can change over time. Established companies generally offer higher dividend yields compared to smaller, newer ones. Calculating dividend yield is straightforward. It involves taking the annual dividends per share and dividing it by the share's price. For instance, if you own a stock priced at $100 per share and receive $10 in dividends annually, your dividend yield is 10%. Understanding dividend yield helps you calculate your investments. You can compare various stock prices and make informed decisions based on your goals and risk tolerance. By investing in dividend-paying stocks, you can potentially earn regular income without selling your shares. This way, you enjoy a consistent stream of income while protecting your investments. Strategy 1. Covered call ETFs. One of the fastest ways to living off dividends is through investing in covered call ETFs. These distinctive funds offer the opportunity to earn income from both stock appreciation and dividend payments. How does it work? The ETF invests in stocks while also writing call options on those very stocks to generate extra income. Call options grant buyers the right, but not the obligation, to purchase a stock at a predetermined price within a specific time frame. Consequently, when the ETF sells call options on its portfolio stocks, it receives premium income distributed as dividends. Furthermore, if stock prices rise beyond the call option's strike price, the ETF may realize capital gains when required to sell those stocks. Several well-received covered call ETFs are available. Examples include EWZ, OILK, and XYLD. These funds often offer enticing yields, frequently in the double digits, significantly higher than traditional dividend stocks. Let's talk their 12-month trailing yields. EWZ has a yield of 11.81%. OILK has a yield of 11.82%. XYLD has a yield of 11.83%. The beauty of these ETFs lies in their ability to deliver income from both dividends and option premiums. This combination results in a more stable and reliable stream of passive income. Nonetheless, it's important to recognize that these ETFs come with risks. For instance, Options may expire without value or stock prices may decline, impacting overall performance. Now, let's apply this strategy to your journey. Suppose your aim is to earn $2,000 monthly, equivalent to $24,000 annually, through covered call ETFs. We can adjust the figures accordingly. Based on current yield levels, you would need an investment ranging from approximately $180,000 to $200,000. This presents an appealing proposition, especially when compared to traditional dividend stocks, which would necessitate around $2 million invested to achieve a similar income level. By choosing covered call ETFs, you can reach your financial goal without a crazy amount of initial investment. This strategy offers an opportunity to generate a steady income stream while minimizing the capital required. Therefore, if you're interested in starting on this journey, consider exploring covered call ETFs as a means to fulfill your aspirations of living off dividends and reaching financial independence. Strategy 2. High-yield REITs, or real estate investment trusts, are entities that invest in real estate properties such as malls, offices, and apartments. These entities generate income from these properties and share a portion of it with their investors. If you're looking to earn passive income from dividends, there are several promising REITs to consider. These include Two Harbors Investment Corporation, boasting a dividend yield of 20.3%, Brandywine Realty Trust, offering a dividend yield of 19.9%, and Orchid Island Capital Incorporated, with a dividend yield of 19.4%. These REITs have a consistent track record of providing investors with a reliable income stream through dividends. Historically, REITs have demonstrated strong performance, with an average annual return of 10.8% over the past 20 years. This implies that investing in REITs can be a smart way to potentially grow your wealth while enjoying a steady income. However, it's important to recognize that the income from REITs can fluctuate based on factors like occupancy rates and the state of the economy. How much should you invest to earn $24,000 per year from REITs? Assuming an annual return of around 10.8%, you would need to invest roughly $220,000. Keep in mind that this figure can vary based on your choice of REITs and your diversification strategy. A clear approach to retiring with REITs is to save and invest a consistent amount regularly, allowing dividends to accumulate until you reach your goal. With commitment and patience, you could achieve financial independence in about 5 to 7 years. Investing for dividends requires a well-thought-out plan suited to your specific goals and situations. Consider how much money you truly need and what you want to accomplish. This will enable you to choose the most suitable REITs for your portfolio and stay on course over time. Additionally, the monthly dividend payouts offered by REITs make them an even more attractive choice for those seeking a steady income stream from the stock market. By incorporating the strategy of investing in REITs, you can potentially achieve your financial objectives, whether that's $24,000 annually or $2,000 per month through dividends. It's a strategy that can transform your dream of living off dividends into a tangible reality. If you're ready to take steps towards financial independence, exploring the world of REITs is a wise move, offering the potential to turn your aspirations into achievements. Strategy 3. Dividend aristocrats. Dividend aristocrats are a unique category of stocks, comprising companies within the S&P 500 index. These companies have shown an exceptional track record of consistently increasing dividend payments to their shareholders for a minimum of 25 consecutive years. They represent an excellent choice for individuals seeking to generate income from their investments. Some of the top dividend aristocrats include 3M, Leggett & Platt, and Walgreens Boots Alliance. These companies, on average, offer a dividend yield of approximately 7%. While this yield may be lower than that of covered call ETFs and REITs, dividend aristocrats are renowned for their unwavering commitment to raising dividends year after year. To qualify as a dividend aristocrat, a company must have consistently increased its dividend payouts for at least 25 years. These companies hail from various industries, but share common traits, including stability, growth, and resilience. They are typically large, well-established corporations that are less likely to be bought out by other companies and tend to perform reliably even during economic downturns. Suppose your goal is to earn $2,000 per month or $24,000 annually through Dividend Aristocrats, considering an average dividend yield of 7%. In this scenario, you would need to invest approximately $350,000. While this number might look unattainable, it's certainly better than the investment required for traditional dividend stocks, which would require around $2 million to achieve the same level of income. Investing in Dividend Aristocrats offers you the potential to receive consistent income from your investments. These stocks have a proven track record of increasing dividends, and their inclusion in the S&P 500 index adds credibility to their performance. Remember that your financial goals are attainable. With a well-structured plan and dedication, you can create a life where your money works for you and financial freedom becomes your reality. If you're not sure where to find other investment strategies, watch the video on your screen. $25,000 in this ETF will earn more than your full-time income to diversify your portfolio and reach your desired income goals.